Contracts. A deeper dive into the practicalities for graduate accountants. Contracts are more than just formal agreements. They are financial instruments that dictate the obligations, risks, and operational framework within which a business operates. As a graduate accountant stepping into the professional world, you're bound to encounter a multitude of contracts that touch almost every aspect of your role. Here is a detailed look into the practicalities of contracts you should be aware of. Understanding the scope. At the heart of any contract is its scope, outlining the deliverables, milestones, and commitments each party must adhere to. The scope isn't just a legal construct, it has profound financial implications. Misunderstanding a contract's scope could lead to improper revenue recognition or understated liabilities. Therefore, you should not only read but dissect the scope to accurately translate it into financial terms and accounting records. Financial implications. Every clause in a contract usually translates to a financial obligation or a right. Payments, security deposits, late fees, termination charges, and performance bonuses are some examples. You'll need to categorize these meticulously, as each could have a distinct treatment under accounting standards like GAAP or IFRS. You should also understand how to record contingent liabilities or assets based on the contract terms. Risk mitigation. Contracts often include clauses for penalties, legal remedies, or collateral in the event of non-compliance. These risk mitigating factors need to be captured in your accounting system, perhaps as contingent liabilities. Also, these clauses often trigger financial covenants that you'll need to track and report on regularly to ensure compliance and avoid any financial or legal repercussions. Cash flow management. From a cash flow perspective, the payment terms in a contract are extremely crucial. Whether it's a net 30-day payment term or milestone-based payments, understanding when the cash moves are essential for cash flow forecasting and liquidity management. Delayed payments could throw off your cash flow calculations and have ripple effects on your financial operations. Currency and exchange rates. International contracts bring the complexity of multiple currencies into the mix. This opens up your accounts to currency risk due to exchange rate fluctuations. Proper accounting treatment for these risks, perhaps through hedging strategies or financial derivatives, becomes crucial. It's also essential to recognize gains or losses from foreign currency translation accurately. Audit trails. Every contract must have a well-documented audit trail for both internal review and external audit purposes. Proper documentation ensures that the contractual obligations match the financial transactions and vice versa. Secure storage and easy retrieval of contracts and related documents should be a standard practice within your accounting team. Amendments and renewals. Contracts are often dynamic, subject to amendments that could change the initial terms. Each amendment should be scrutinized for its accounting implications, from changes in payment terms to modifications in deliverable timelines. These amendments often require adjustments to your accounting records and possibly restatement of financials. Compliance. Regulatory compliance, driven by accounting standards and tax laws, is non-negotiable. For instance, under IFRS 15 or ASC 606, revenue from contracts with customers must be recognized when control of goods or services is transferred, which may not necessarily align with the payment schedule. Hence, you need to be aware of the latest accounting standards and their implications for contract accounting. Contract renewal dates and monitoring. Keeping an eye on contract renewal dates is not just good practice, it's essential for financial planning. Automatic renewals might cause unplanned financial commitments, while lapses in critical contracts could lead to operational hiccups or lost opportunities. Some contracts have evergreen clauses that renew automatically unless notice is given, while others may include option to renew clauses that require explicit mutual consent for renewal. Being aware of these nuances can protect the company from unintended financial consequences. Team collaboration. Contract management is seldom a siloed function. It usually involves cross-functional input from legal, procurement, and finance teams. Your role as a graduate accountant in this collaborative environment is to ensure that financial considerations are at the forefront, both during contract negotiations and throughout its life cycle. Contracts, as you will discover, are not just legal documents but also intricate financial tools that can significantly impact a company's bottom line and operational efficacy. By understanding these facets deeply, you are not merely fulfilling your role as an accountant, you're laying the groundwork for a future role where financial strategy drives commercial decisions.